Well, good morning, folks. Hey, it's Shooter. Hey, we're going to do some explaining about the S&P here. Of course, at the end of the presentation, please do review our disclosures. Jumping right into the SPY, which is where I'm going to spend most of my time. Here we got this little wedge potentially forming out here, which of course supports to the upside. We have our trend support, trend resistance for this leg here. If we jump out to the monthly and we look at our January 2009 lows, we tag this speed line, so pretty much runs. So 1, 2, 3, 4, 5 was our COVID lows. Notice the wick closed above it, so we didn't really negate the trend support. It held. So we really won't break down here until we close below this 398 on the S&P. So we have quite a little bit potentially to the upside as far as I can see here in the count. Now let me come back down to the weekly. Let's just break this down a little bit and see what we have here. We have an ABC that's extended. Equality is more something like this. Extended is here. Elongated is here. Right now, it could be elongated down to here, but we didn't get that. So right now, we are looking for potentially an ABC. We could have that. It is in the cards as far as a corrective leg. I mean, it's not negated yet because of where we are in the count. Pretty tight though. So that 418.31 would be our B. So A would have been down to the 348.11, and then C would be down to 286. However, that is not how the count is looking at this because of how the base is right here. It's looking at it as a 5-wave to the upside. Low, higher low, higher low, high, higher high. We're an uptrend. So until that's invalidated, which is a close below 380.65, okay, what is the trend? The trend is your friend until the end. And that's pretty much what we're looking at. I'm just going to say, hey, I could just rest my case right there. However, let's jump down and look at RSI here. Now, when you look at your mounds in RSI, especially when you go out to the monthly and you have the big time frames, you have these pushes and these valleys, so another peak, valley, peak, valley, peak, valley, or trough, what comes after the peak? I mean, the trough or a valley, another peak, So, when I look at the monthly, RSI sort of supports that thought. On top of that, we sort of have a squeeze look in volume, our confirmed low here, right? So then we had this little squeeze here as we came out of it, which, I completely screwed this up because I couldn't read it. I didn't buy until right about here, bounced up here, came around to here, right? And then pushed up to about here. And then we came off here and I did not cover. I got taken out with those stops on those weeklies. So I only really got a piece of about this by the time I got stopped out of this whole leg here. So this was a big learning experience for me because it's never happened. You realize this COVID low is historic. We've never closed America before. It's closed. So I don't know that we can compare that to the Great Recession. This is the Great Recession. We basically came in, put a double top, didn't come out of that till 2013. We came in here, the original crisis occurred where all the banks froze. We broke down by January 23. That was pretty much over. So the main crisis was really in 02. Then the Fed started what? QE. Ran it up into this. Fed stopped QE. Boom. Fed started QE again. 2011, 12. We started coming out of it. So we didn't actually come out of it till 2013, till that QE was in place. Now, what I'm going to say is I'm going to add in my thesis about QT and QE. Quantitative tightening, quantitative easing. Okay. The Fed printed trillions for the bankers. The bankers got spooked with the bonds. They just became rich. Where did they put their money? Into equities. BOJ printed money. Where did a chunk of that money go? Equities. China printed like 630 billion. Where did a chunk of that go? Into equities. Right. So I think that trend is going to continue. And I agree with Kirk's thesis about the inflationary war that's going on between Asia and America right now. I think China's going to keep printing. The whole time during COVID, we printed and China did nothing. They basically locked everybody up, put out the police and started beating people. Didn't happen in America. We just printed money. So I think they have a lot more to print, than we have the capabilities of raising rates. So basically what BOJ did and China did, it completely invalidated the rate hike. So we're basically starting over at this point, which a lot of people aren't saying that. I don't really think the Fed can raise to 8% or 10%. But I think there's a chance we stay in this range. So the 50-day to the 8-day is really, we could be here for a year. If you look at this breakdown right here, this comes in the late part, November, December, that speed line I have there for the breakout. But we could go all the way out to January 25 and just, trek around here. So let me jump over and bring in another SPY and show you what potentially some other outcomes could look like. So if we had a triangle here, it would look like something like this. If it extended to a 9 wave, it would look like this. All right. So, the 9 wave is way the heck out there. That comes out. You just throw up as far as time. So we're looking at January 24. If that does manifest into a 9, the 5 wave would be roughly November, December. So, I mean, we're going to be here for a while. But ultimately, here's your sign. To mitigate the risk, for me, your stop is here at 380.65. That's your stop. That's your sign. That's your risk. Breaks below that, I start changing my mind. Now, just looking at harmonics really quick, we have some upside here in the monthly, weekly, daily shows a little downside potentially, right? 4-hour shows to the upside, 90-minute shows to the downside, hourly, 30-minute, So short term, we have some potential for some downside here. But even if that does break down, we're talking about 390 to 4,000, 403 to 391. Not a lot of downside as far as the S&P is concerned. However, there is a possibility that we still break down to a 5 wave, from this channel up, like what it would look like. I just don't feel it right now with RSI. I need RSI above 70 really for me to feel it. We're not overbought right now. I mean, we're not. Right in the middle, flat in the middle. We're in no man's land. So, you could use this speed line as your stop. This is your support. So, looking at, my thesis of 1, 2, 3. So this is a 1, this is a 2, and this would be the 3. So just focusing in on the shorter time frame, we confirmed to the upside with a close above the 23.6 on the weekly. However, we have not on the monthly. So that's the next thing we should look for. There is my 380.65 stop. That's your sign. That's your risk. And, basically that's the way I see this. Jumping over to the NASDAQ one more time, that stop would be 285.19. That's what I see. I changed my mind. I was looking for some decent downside in the NASDAQ, and that changed in this range right here. It could be a dead cat bounce, but, RSI just doesn't support that in my view. We've got these mounds, peak, trough, peak, trough, peak, trough. Look at how much deeper that trough is, how further we pulled down with RSI. We just don't, after those kind of shelves that we put in, it doesn't continue. Could there be a black swan event? Yeah, Taiwan, something like that. Yeah, it could happen, but I don't see that. All right, let's come in and just look at a couple of the other possible outcomes. So equality on our ABC is right here. We're overshooting it a little bit. Count doesn't suggest that we do that. I also see a broader ABC potential, maybe to around 440. That also has a possibility there. There's also a possibility of a leading diagonal, which, puts us way the heck up here. But leading diagonal would be more like this, maybe. If we come in much tighter where we're putting in the 3, that's very viable. But there again, that's to the upside. That's, a little bit further up on the count. So I basically say between now and November, December, I think we're going to see the upside, And ultimately, I think the count reflects the potential for this blow off top, way the heck up here, at 521.27. So here again, your sign is a stop below a close on the monthly, 380.65. How can you mitigate this? Hey, you could come in here and sell, roughly 350 puts. You could also come in and sell some 381 puts. Reduce your position size if you want to trim a little bit and cut down your time frame. Sell the weeklies instead of the monthlies. And if you're scaling into common shares, the 380 is your stop. How you can mitigate that again is turn around and sell a covered call right around this 460. Should be good with about 60 days on that. You could probably push 90 days because I just don't see us pushing up to there in that period of time. I think we're more than likely going to stay in this range of this 50-day and this 8-day for a longer period of time. I think we chop just like that 5 wave put us out to maybe as late as January 24. So between November and January 24, I think we stay in this range right here. I don't see any reason for us to come out of it. We need a catalyst to get it going a little lower. The thesis on China printing money and BOJ, I don't see that stopping or waning. And honestly, according to Jamie Dimon, the banking crisis isn't over. So how much more money are they going to print? Hey, that's my 2 cents. Great trading, folks. Until next time.